Welcome to our comprehensive market technical snapshot for December 12, 2025. In this video, we'll break down the latest comparative analysis across a diverse set of stocks, revealing the underlying momentum, trends, and convictions shaping the current market landscape. By examining these securities side by side, we'll uncover the forces driving both bullish breakouts and deep corrections, helping you understand where the market stands and what it means for investors. Let's begin by exploring the key indicators that set the tone for today's market environment. To gain a high-level view, we start with a comparative matrix of key technical indicators. This dashboard approach allows us to quickly spot outliers, clusters of strength, and areas of weakness across the stocks analyzed. By comparing metrics like RSI, MACD, and trading volume, we can identify which stocks are breaking out, which are consolidating, and which are under pressure. This unified perspective is essential for recognizing market themes that might otherwise go unnoticed. Let's dive into the stocks showing the strongest bullish momentum. Canopy Growth Corporation, CGC, stands out with a strongly bullish outlook, executing a sharp breakout supported by very high trading volume and a positive MACD well above its signal line. Similarly, CBDMD, Inc. YCBD experienced a massive price spike, confirmed by remarkably high volume and a bullish MACD crossover. Both stocks are riding intense buying pressure, but their high RSI values suggest they may be vulnerable to short-term pullbacks. While CGC and YCBD are leading the bullish charge, it's important to note the risks. CGC, RSI of 79.44 is firmly in the overbought territory, signaling a potential for short-term pullback. For YCBD, the current surge is directly challenging its long-term bearish trend, making it crucial to watch whether these gains can be sustained. These examples highlight the need for caution, even in seemingly strong uptrends. Next, we look at stocks experiencing corrective pressure within long-term uptrends. Broadcom Inc., AVGO, and NVDA Corporation, NVDA, are both market leaders facing significant short-term corrections. Despite their weakness, they remain above their 200-day moving averages, keeping their long-term uptrends intact. Their low RSI values and bearish MACD signals, combined with high volume on down days, suggest that these corrections are being closely watched by traders for potential support levels. BBAI Holdings, Inc. BBAI is another example of a stock in a corrective phase. Its RSI is neutral, but a negative MACD histogram signals waning momentum. High trading volume on its down day suggests significant profit-taking, confirming its short-term corrective status. Traders are keeping an eye on key support levels for signs of a potential rebound. For AVGO, the S2 support level at 314.95 is a critical inflection point. A break below this level could invalidate the long-term uptrend. For NVDA, the 200-day moving average serves as a crucial support. These technical levels are being closely monitored, as they may determine whether the long-term bullish structure remains intact or gives way to further downside. Moving to the bearish side, several stocks are in confirmed downtrends or technical distress. Strive Asset Management, ASST, and Paranovus Entertainment Tech, PAVS, are both trading below all major moving averages, with persistently negative MACD signals and low RSI values. High trading volume on down days confirms ongoing selling pressure and bearish conviction. Oriental Culture Holding LTD, OCG, and WOK Medical Technology Group, WOK, are experiencing catastrophic collapses. Their charts show extreme volatility, with astronomical average true range, ATR, values relative to their stock prices. Both are characterized by extremely high capitulation volume and RSI values near oversold levels, marking them as highly speculative and distressed assets. Some stocks, like Plug Power Inc., Plug, are in a transitional state. Plug is attempting a short-term bullish consolidation, with an RSI of 57.06 and price above short-term moving averages. However, its MACD is nearly neutral with a weak bearish signal, and a very low ADX indicates a lack of strong trend. The stock shows potential, but confirmation is still lacking. By grouping stocks according to their technical outlook, we can better understand the market's segmentation. There are clear distinctions between those with strong directional momentum, those in healthy pullbacks, and those in significant technical distress. This approach clarifies the landscape and helps investors identify where opportunities and risks are concentrated. The Relative Strength Index, RSI, paints a picture of extremes in the current market. On one end, CGC is firmly in overbought territory, while YCBD is rapidly approaching it. On the other, a significant majority of stocks show weak momentum, with RSI values near the oversold threshold. This polarization highlights the intensity of both buying and selling pressures at play. Oscillator readings, especially RSI, reveal that very few stocks are in the neutral middle ground. Most are either showing intense bullish momentum or are approaching oversold levels. This lack of balance suggests a market environment dominated by strong, one-sided moves, rather than healthy, broad participation. Analyzing trend strength using the Average Directional Index ADX reveals that only a few stocks, like CGC and BBAI, exhibit strong, established trends. CGC's trend is confirmed bullish by its positive MACD, while BBAI's negative MACD histogram warns of waning momentum. AVGO shows a developing bearish trend, confirmed by its strongly bearish MACD. Most stocks, including Plug, ASST, NVDA, and WOK, have low ADX values, indicating weak or non-trending environments. However, a low ADX does not mean an absence of pressure. ASST, NVDA, and WOK all have clearly bearish MACD signals, giving them a distinct bearish bias even in choppy or sideways markets. Plug stands out with a near-neutral MACD, confirming its lack of directional conviction. Trading volume on December 12, 2025, played a crucial role in confirming the conviction behind price moves. In bullish stocks like CGC and YCBD, high volume validated the breakouts. Conversely, high volume on down days for ASST, AVGO, BBAI, and WOK confirmed ongoing or mass selling pressure. For speculative penny stocks like PAVS and OCG, exceptionally high volume indicated intense speculative turnover and likely capitulation. The synthesis of these indicators reveals a market characterized more by widespread weakness and isolated speculation than by broad, healthy participation. While a few names are experiencing explosive moves, the majority are under pressure, reflecting a cautious and risk-off environment. The current technical landscape is deeply divided. On one side, we see explosive, high-volume breakouts in a few speculative names like CGC and YCBD. On the other, a much larger group of stocks is suffering from severe, long-term downtrends and even catastrophic collapses. This bifurcation suggests a speculative, rather than fundamentally broad, appetite for risk. A critical sign of market caution is the weakness in established, higher-priced stocks like AVGO and NVDA. Despite their long-term uptrends, their low RSI values and bearish MACD signals indicate that profit-taking and defensive posturing are impacting even the market's strongest players. This weakness in leadership is a key signal of broader market caution. When we weigh all the technical evidence together, the overall sentiment for December 12, 2025, leans bearish. The breadth of weakness, encompassing both market leaders in correction and multiple equities in severe distress, outweighs the narrow strength seen in a handful of speculative breakouts. The prevailing theme is one of correction, risk-off behavior, and a search for safety. Let's take a closer look at Canopy Growth Corporation, CGC. On December 12, CGC executed a sharp breakout, supported by very high trading volume and a strongly positive MACD. Its ADX value of 30.68 indicates a robust trend. However, with an RSI of 79.44, the stock is firmly in overbought territory, making it susceptible to a short-term pullback. This combination of strength and risk is a classic hallmark of momentum-driven moves. CBDMD, Inc. YCBD followed a consolidation phase with a massive price spike, confirmed by high volume and a bullish MACD crossover. Its RSI of 67.24 is strong, but the real test lies in its ability to sustain gains against a long-term bearish trend. The coming sessions will be critical for determining whether YCBD can establish a new uptrend or revert to previous lows. Broadcom Inc. AVGO is currently undergoing a bearish correction within a long-term uptrend. Its RSI of 34.2 is approaching oversold territory, and a strongly bearish MACD confirms the downward momentum. High volume on down days suggests major selling, making the S2 support level at 314.95, a critical point to watch for potential trend reversal or further downside. NVDA Corporation, NVDA, is also in a bearish correction, with an RSI of 37.06 and a bearish MACD. Despite the weakness, NVDA remains above its 200-day moving average, which serves as a vital long-term support. High volume on down days reflects significant market participation, and traders are watching closely for signs of stabilization or further decline. BBAI Holdings, Inc. BBAI is experiencing a modest pullback within its uptrend. Its RSI is neutral at 49.62, but the MACD histogram has turned negative, signaling a loss of upward momentum. High volume on its down day suggests profit-taking, and the focus now shifts to key support levels for potential buying opportunities if the long-term trend is to resume. Strive Asset Management, ASST, and Paranovus Entertainment Tech, PAVS, are both in persistent downtrends. Prices are trading below all key moving averages, with negative MACD signals and low RSI values reflecting strong recent declines. High trading volume on down days confirms ongoing selling pressure and bearish conviction. Oriental Culture Holding LTD, OCG, and WOK Medical Technology Group, WOK, are experiencing catastrophic collapses. Their extreme volatility, astronomical ATR values, and extremely high capitulation volume mark them as highly speculative and distressed assets. RSI values near oversold levels further highlight their technical weakness. Plug Power Inc. Plug is in a short-term bullish consolidation phase, attempting a reversal. Its RSI of 57.06 and price above short-term moving averages are positive signs, but the MACD is nearly neutral with a weak bearish signal. A very low ADX of 10.32 indicates the absence of a strong directional trend, so confirmation is still needed for a major reversal. By synthesizing insights from key indicator classes, momentum RSI, trend strength ADX, and conviction volume, we gain a holistic view of the market's health. This cross-comparison helps measure the breadth of momentum, trend, and participant conviction, painting a more complete picture of current conditions. The RSI landscape is polarized. CGC is firmly in overbought territory, while YCBD is approaching it. Plug displays healthier bullish momentum, not yet overextended. In contrast, most stocks are near oversold, including AVGO, NVDA, ASST, OCG, WOK, and PAVS. This widespread weakness suggests intense selling pressure is a dominant market theme. A nuanced trend analysis separates strength, ADX, from direction, MACD. CGC and BBAI post high ADX values, signifying strong trends, but BBAI's negative MACD warns of waning bullish momentum. AVGO's developing trend is confirmed bearish by its MACD. Most other stocks have low ADX, indicating weak or non-trending environments, but with clear directional bias. Volume acts as a powerful confirmation tool. High-volume validated bullish breakouts in CGC and YCBD, while also confirming bearish conviction in ASST, AVGO, BBAI, and WOK. Exceptionally high volume in speculative stocks like PAVS and OCG signals intense turnover and likely capitulation, underscoring the speculative nature of recent moves. The overall synthesis points to a market with more widespread weakness than strength. Isolated speculative breakouts are overshadowed by a larger group of stocks in correction or distress. This imbalance suggests a cautious, risk-off environment, with investors seeking safety over aggressive risk-taking. The technical landscape is highly divergent. Explosive moves in a few speculative names contrast sharply with the persistent weakness in a majority of stocks. This split reflects a market where risk appetite is narrow and speculative, rather than broad and fundamentally driven. The weakness in market leaders like AVGO and NVDA is a critical signal. Despite their long-term uptrends, short-term corrections and bearish technicals indicate that even the strongest stocks are not immune to current market pressures. This trend is often a precursor to broader caution and defensive positioning. The overall technical sentiment for December 12, 2025, is predominantly bearish. The breadth of weakness, including corrections in market leaders and severe distress in multiple equities, outweighs the narrow strength seen in speculative breakouts. The market is in a phase of correction, with risk-off behavior dominating. Momentum indicators like RSI and MACD are essential for gauging the strength and direction of price moves. RSI measures the speed and change of price movements, identifying overbought and oversold conditions. MACD tracks the relationship between two moving averages, signaling trend changes and momentum shifts. Together, they provide a comprehensive view of market dynamics. The Average Directional Index, ADX, is used to quantify the strength of a trend, regardless of its direction. A high ADX value indicates a strong trend, while a low ADX suggests a weak or non-trending market. When combined with directional indicators, ADX helps traders distinguish between trending and choppy environments. Trading volume is a key confirmation tool in technical analysis. High volume during price moves indicates strong conviction among market participants, while low volume may signal a lack of commitment. Volume spikes often accompany breakouts or breakdowns, confirming the validity of the move and the underlying sentiment. Support and resistance levels are fundamental concepts in technical analysis. Support is a price level where buying interest is strong enough to prevent further declines, while resistance is where selling pressure halts upward moves. These levels are closely watched by traders for potential reversals or breakouts. Capitulation refers to a point in the market where investors give up on holding their positions, leading to a sharp increase in selling and a dramatic drop in prices. This is often accompanied by extremely high volume and marks the end of a prolonged downtrend. Recognizing capitulation can help identify potential bottoms in distressed stocks. Speculative risk refers to the potential for large gains or losses in assets that are highly volatile and unpredictable. Stocks like OCG and WOK, with extreme volatility and high turnover, exemplify speculative risk. These assets can offer rapid returns, but also carry the danger of catastrophic losses, making them suitable only for risk-tolerant investors. Risk-off behavior describes a market environment where investors reduce exposure to riskier assets in favor of safer investments. This shift is often triggered by uncertainty, corrections, or signs of distress in leading stocks. The current market, with its breadth of weakness and isolated speculative moves, is a classic example of risk-off sentiment. To recap, the technical snapshot for December 12, 2025, reveals a market marked by divergence, caution, and a predominantly bearish tilt. While a few speculative names are breaking out, the majority of stocks are under pressure, with market leaders showing signs of correction. This environment calls for careful risk management and a focus on safety. As we look ahead, it's important to monitor key support and resistance levels, watch for confirmation of trend reversals, and stay alert to shifts in volume and momentum. The current market environment favors caution and selectivity, with opportunities likely to emerge as trends clarify. Stay tuned for future updates as we continue to track these evolving technical themes.